Hi, just a quick update on the liquidity after quite a squeeze going down today in positioning on top of the OPEX changing of positioning on Friday. So just here having a look, I'm zoomed in here on the 5 minutes. I've got the NDX up here, green in these top three indicators here. They're all to do with the NDX. The bottom two indicators here are to do with the MAG 7. First thing to notice is MAG 7 is mainly below the line, and we've seen reasonably strong buying since mid-afternoon on Sunday. I actually thought this buying on Sunday was the buying back of the shorts for the day. There was obviously some feeling that nothing was going to happen over the weekend, or if it was going to happen, it was going to happen quickly. Whoever it was well informed, and we can see then we've had a period during the day until early afternoon where that was still the case, and then we've had a big buying session going into the afternoon. If we just have a look at the SPX and see what it said in the same period, again, very similar, might have started into the afternoon a little bit earlier. Again, very strong afternoon Friday, starting earlier in the day. There was some posturing and positioning for what we've just seen, which was really a squeeze against a lot of hedging. Again, here's the retail ETF SPY, again, reasonably strong, maybe not as strong, much weaker during the day, then less certain about the decisions that are being made, obviously. We'll have a quick look at the Qs. Qs are even a little bit stronger than the SPY. If we just go across and we have a... I don't have that screen set up. Just let me move this across here. If we just have a look and see how that panned out, we can see here in the data that we've had quite a good buy signal today. It's one of the only buy signals that was shut, so SPY really did close that loop and is back into a going north position. We can also see here that even the long-dated hedging has been taken down. Over 500 in the money puts had been closed. If we just have a look here again, I'll just show you, this is the shorter end of the hedging. We can see here that in the less than 30-day section in the SPY, we have lost 2/3 of the hedging in one go. And the hedging that has remained is at the money. So it's really just the rolling at the money hedging. Nearly all of the in-the-money hedging has been closed, some 6,000 deep in the money positions. We haven't seen a great deal of opening. Again, this is sort of at the money. There isn't a great deal of buying into the day, but we could see in the futures there was definitely a lot of buying. Anyway, that's a very interesting start to the week. We're really in a market that is a little bit rudderless. They're setting one way and going another. It's something I haven't seen before. I have not seen the data this wrong on a day or on a reaction. Let's just see how that plays out. It's much more a liquidity at that time. Those small decisions is much more related to the movement we're seeing in the market at the moment. We have had a lot of gamma come off, and we are setting up for that scenario where we get a blow off top going into our July OPEX. Anyway, have a good Tuesday's trading, the 24th of June today, and have a good week. Thank you for having a look at this little analysis. Cheers.